tweet comes from the Kobisi letter, and it's about oil prices. Stop me if you've heard that before. Oil prices are now crossing above the $115 a barrel range in the U.S. Now, this came out yesterday, right after the futures opened. So it did cross 115. It is worth noting, looking at oil now, crude anyway, we're at a 110 handle. So it's down 5 points. It's down 1.1% on the day right now. This is after the initial spike higher. As a result, our models indicate that if current levels are sustained for another about 7 weeks, U.S. CPI inflation will rise to 3.7%. So if it's 7 weeks of this higher oil prices, 110, 115 and above, then we go to 3.7% on CPI inflation. That would put U.S. inflation at its highest level since September of 2023. Amid the surge, Americans have spent an additional $240 million per day on fuel costs since the Iran war began on February 28th. I did hear a stat on CNBC that it was only about 3% of household spending. So obviously what this is going to do is disproportionately impact those on the bottom end of the K curve. It's going to be much harder and have much more of an impact on them than anyone else. That's a total of $8.6 billion in increasing spending on fuel. That's only over the last 36 days. Our new base case is 3% CPI inflation, and it's only rising as the war's timeline has extended. So key takeaway here, first of all, we saw a spike in oil prices yesterday when the futures opened. That has since reversed. We'll see if that continues here today or if that trend continues. But this is basically hitting on the exact same thing that we have been talking about for a long time. This is all going to come down to the length of the conflict. If the conflict does get resolved, and I saw reports indicating that yesterday there's more and more traffic going through the Strait of Hormuz, forget all of the posts, forget all of the rhetoric. I think it's all going to come down to traffic through the strait and what kind of actual impact that has for oil prices and how long that takes.